Alright guys, welcome back. So in this video we're going to go over some trading reels on Instagram, and we're going to go over it and basically look through the comments, see if there's anything funny we can find, maybe some good stuff, bad stuff, all of it will be mixed in, so a bit of a reaction content, but I'll also be giving my opinion, so should be pretty cool. So without further ado, let's roll the intro and let's get cracking. Alright, let's kick it off with the first reel.
I trade one candle every day at the same time. And this boring strategy made me over $100,000 in a single month. Because the truth is, the more that you complicate your trading, the more money that you're going to lose. But the more that you simplify, the more you'll make. So here is my stupid simple approach. This is called the first candle rule. First things first, you're going to get to your desk right at 9:30 a.m. EST. And on the 5-minute chart, you're going to wait for the first candle to form, the one that happens at 9:30 to 9:35 a.m. And believe it or not, this one candle is going to give you everything you need to find consistent winning trades. Once that candle closes, you're going to mark out the high and the low. And these are the only key levels that you need for the entire trading day.
Right, I'm just going to hit pause really quick. We're going to actually test this, and I'm going to show you a better approach after this, so stick around. But let's finish watching it, let's see what his actual strategy is, and we'll break it down.
Next, you're going to drop down to the 1-minute chart, and this is where we're going to find our entry. And this is also where most people mess this up, so I want you to pay very close attention. When price approaches one of these levels, you don't just jump in. You want to see a very specific type of behavior. You want to see price to break through your level and create a gap between the candle wicks. Not just a wick or a candle closure, that is not enough. You need that gap formation because this tells us the market is moving with real force and we're able to know who is in control of the market, whether it's buyers or sellers. And once this gap forms, we only need to wait for one more confirmation to enter our trades. And this helps us avoid the losers. Once the market retests this fair value gap, we need to see a candle engulfing. And as soon as we get that, we enter the trade and we target a fixed 3-to-1 risk to reward.
Okay, alright, I got the breakdown of it. Okay, so basically 5-minute candle on the open, US Open. So we're going to try this on the NQ. Alright, let's get a chart up. Alright, here we go. So here's the US Open, 9:30 EST on my time because I'm in the UK right now. It's 2:30 p.m. So this is the 5-minute open candle. We're going to draw out the high and the low just as he said, like so. And then we're going to switch over to a 1-minute chart. Like he mentioned, where is it? Where is the high and low? Here it is. Okay, and then we're looking for a clear break. He said a fair value gap. So, alright, here's a break, and then also an engulfing candles, like a retest and an engulfing candle. So, didn't really happen here. Didn't get the engulfing candle, so no. Here again. Okay, so this is looking a little bit better. Whether that will fall exactly into his criteria, I don't know. But again, you know, we got a bit of a gap here. Comes back in, and then not quite an engulfing, but you know, there is some what some people would call a rejection. I think a lot of people would probably enter based on that, and then you know you're just above there. And then 3-to-1, he said a fixed 3-to-1 all the time. I don't know why it's fixed. Personally, I disagree with that. But no, you would have got stopped out. Any other opportunity? Okay, so here we have a clear breakthrough. Oh, here, perfect. Right? Clear breakthrough. Creates a gap between the two wicks. Comes back in, engulfing, even a, some people call that an evening star pattern as well. Enter again, 3-to-1, and yeah, you would have got stopped out. I don't even have to, you know, do the 3-to-1. But, okay. So, look, in this instance, didn't work at all, right? And then, is there any other opportunity? No, and that's the end of the day. Alright, cool. So, didn't quite work. I'm not saying that it's not a profitable strategy. I don't know. I haven't got the data, right? But I wouldn't trade something like that, right? Because you're not actually putting any thought into what the hell is going on. What I will do, though, is I'm going to just show you guys the footprint. And I'm going to see, you know, instead of blindlessly just shorting the market because there's a fair value gap and then a candlestick pattern, and because it's, you know, below the opening 5-minute range, and forget all that. Just go to the volume footprint. We're going to see what actually occurred. So the first breakout here. Oh, well, look, clear as day. I would have bought all day long. And if anyone's watched my live trading, I'm not just saying that. If you watch me trade live, you can. Ola Prime TV, every single day. You will see me trade live. This is what I look for. Perfect. All right. So look at this. Look at all this volume that came in. This is the delta, right? Okay, so the difference between buy and seller, 130 contracts, another 130, 236, 176, 177, 177, 250, 302, 237. All that volume came in, right? Now, before you just jump in on high volume and sell, right, you want to see, is that volume being effective? Okay? And just look at the delta at the bottom here. 1,855 extra contracts. That's the most traded in that area, right? For a long shot. And look what happens in the next candle. Now, if you did sell here for whatever reason, say you just jumped on to the high volume, you're very quickly going to be like, I'm going to get the hell out of this market. Because if 1,855 contracts barely pushes the market down, right? And then look, on the next candle, it's a bullish candle, but the delta is still negative, right? There's still sellers coming in, but they're just not able to push the market down. Why would you jump in for a sell when there's so much sellers, so much sell pressure coming into the market, so many people are selling, there's so many orders, and it still won't go down? Why the hell would you jump into that? You're in the losing battle, right? You rather align yourself with the buyers, people where they don't need to put in 1,000, 2,000 contracts in order to move the market. Buyers put in a little bit of volume, 68, 64, 50. Look at that, they're doing quite well. And all right, I would initially jump in pretty much when I saw that 104, or 92, I would pretty much jump in here for a buy, if it was me. But if you want to be a bit more cautious and wait, read what is actually going on. So you had all these sellers come in, right? Really simple. Just keep your eye on it, right? Look at all these sellers. So these sellers here, they were quite effective at pushing that market down. Great. Same with these sellers at the top here, 138. But then everyone here is trapped. This whole candle is one big sell trap, right? They're feeding a large iceberg, a large buy order. And then as we start pushing above and getting higher, look what starts happening. Look at all that volume now coming in from the buy side. What is that? That is not necessarily new buyers coming in. It will be partially. But that's a lot of these sellers panicking. They entered, right, a lot of size. Bear in mind, there's a lot of volume coming in. They entered with a lot of size, and the market's gone instantly against them. What the hell are they going to do in that situation? Get the hell out the trade, right? These are institutional sellers. These are big players, right? And when I say institutional, believe me, institutions get it wrong all the time. Right? There are institutions that get it wrong all the time. Maybe it was an algorithm. Maybe, you know, there was a breakout and there was some algorithm that just sold. Who knows? I don't know. But for whatever reason, a bunch of heavy sellers came in, right? But it instantly went against them. They started panicking. They all start dropping out, right? And that shows up as buy orders. That is when you strike. That is when you say, aha, okay, they've just admitted defeat. You get the hell out the market. And look, the market they tried to come in again, tried to defend their position. This is never a sell. This was never ever a sell. This was always a buy, this area, right? Look again, they're trying to come in. What's going on? Nothing. These are all bullish candles. They're trying to come in again with a bit of size, and then they just give up. And then a bit more buyers come in, and we just keep pushing that market up nicely, right? And it keeps going up, more buyers coming in here, more, and then eventually sellers start coming in again with a bit of aggression. Buyers are starting to struggle a bit. There's a bit of a battle, up, down, and then the sellers are quite effective here, again, at pushing the market down, right? So, would I have sold there? Absolutely not. Let's look at the next area. So this one here. Again, look, same story, guys. Same exact story, right? It's so easy. In fact, this one's probably even easier to read, right? Because you can actually, I just spotted something. I'll point it out in a second. Again, look. All these sellers, well done, right? They came in heavy, 123, 93, 183. They're coming in heavy. They are actively pushing that market down. They're very happy, right? Look at that, 394 contracts, a lot of heavy selling going on. They're very happy. They're pushing the market down. People are starting to take notice. Oh, look, the market's going to drop. Let's go, go, go. So they all start, everyone and his dog starts selling, right? And you get all these late sellers, people who are a bit late to the party, especially this 324, really big. And again, even more sellers at the bottom of this candle trying to sell, but look what happens. The moment the market starts going up against them, these sellers are starting to drop out. They're getting out. Now, whether this 342 and 195 are, the sellers from the top here taking profit, could very well be. Whether it's, sellers who got in here, who are a bit worried but it's going up against them and they quickly get out for a bit of profit, whether it's these guys here who are trapped and they're saying, oh god, I'm in drawdown, quickly get out. I don't know, it could be any one of those three, but nonetheless the sellers drop out, right? They're not holding on to their position, they don't like it. Again, you can see them all starting to drop out. Same thing, again, it's a buy. It's always been a buy in that area, right? Always buy, and then the buyers just push the market up. And I think there was one more opportunity. Or was it just that two? Oh, yep, there's another one here. Right? Again. Okay, so this one is a bit more interesting, right? So this one doesn't really have the trap setup so obvious, but again, read the market. Always look at the beginning of the move, right? Look at the heavy sell volume. Excuse me. Right, and here, and if you're in this area and you're thinking, oh, it could be a buy, look, people are buying, but it's not really going their way. Next candle, lots of sellers coming in, heavy volume again, 100, 100, 100. And then look at this, loads of heavy sellers coming in. They're pushing the market somewhat down, but right, read the story. Always read the story of the market, okay? I'll just move this down. Again, a few more sellers coming in. But look what starts happening as we get down to these lows, right? We start seeing little slivers of buyers coming in, heavier buyers. Now again, are these fresh buyers? A few maybe, but majority are going to be a lot of those sellers at the top there, right? All these big sellers that came in, taking money out the market. They're taking profit, right? They're getting out the market. Again, a few more trap sellers trying to play the breakout. Again, the buyer comes in, and then when we start pushing up a bit heavier, all of a sudden all those sellers drop out of the market again. They try coming back in for another, hit, and and that fails, and then look, boom, 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 the market goes up. So really, really simple. As long as you read it as a story, you can see what's actually going on. So this whole opening range thing and, draw out the high and low and wait for a fair value gap. And why are you guessing all this stuff, right? Oh, it shows that it has momentum. Maybe so, but momentum can quickly change, right? Only because there was momentum a few candles ago doesn't mean that momentum will continue. Order flow and trading, whether you like it or not, whenever you enter a trade, it can only do what is, it can only show you what's going to happen in the next few seconds to a minute, right? When you're seeing this stuff, and you have to adapt with it. That is why being liquid, being fluid with the market, being like water, like Bruce Lee said, that's what you have to be. You have to be, you can't have these kind of fixed 1 to 3 and only that. Look, that might work over the long run if you find yourself a small edge, sure. But real trading, actual trading like how the pros do it, we are fluid with the market. If we see something that's clearly not good for us, we're getting the hell out the market. And that is what the pros do. And you can see that in the footprint, right? When something happens that they don't like, and they're wrong as well, a lot of the time. Trading's not about being right all the time. It's about reacting to what you're seeing. You can't control the market. The market will do what it does, right? But you have to react to what it's doing. And the footprint gives you that ability because you can see clear as day the actual live data, right? Oh, look, bunch of sellers came in, not going their way. They're all starting to drop out. Am I going to sell? Probably not. I'm probably going to look to buy, right? If all the other sellers are getting their stops hit, yeah, I'm probably not going to sell in that moment either, right? So, yeah, you got to look at the bigger picture, and this is the real way of doing it, okay? So, I hope that helped. But let's move on to the next reel.
Can't lie, this trader's not looking good.
Yep.
All right.
How would you say you feel
like
right
a
now?
trading
Anxious?
couple?
No, I feel like it is what it is. What can I do? But I feel like now because I started a challenge, I want to pass.
I mean, it's good if you're not anxious. That's good. You should be confident.
Yeah.
I've seen the data. I'm not worried about this personally, but obviously you haven't traded in a while, so.
In a very long time. But I've been back testing a lot.
All right. Trader's back. We're back in profit.
Really taking one trade today.
We'll see what happens after this one. Can't lie, that's why you don't close early, man. About to hit TP.
Very nice.
Remember to follow for more content. If you want to see more of us trading, I'll also probably put her TP up. If we win, that is. I'll show hers as well.
All right.
There.
Lovely. Okay. Looks like a trading couple. I love to see that. That's pretty awesome. Trading is a very male-orientated space, so seeing females, women out there, getting into trading, that I love to see that. So that's really awesome. Gotta give my hats off to them because they remained really, really calm, even though they got that close to being stopped out. They didn't really care. Oh, well, okay, and that's the kind of way you need to be, right? When you're trading, I really like it actually. I just want to say, I like how calm they were, right? Even when they were getting close to stopped out, and even when they hit TP and made money, they weren't celebrating, getting emotional. Very flat. And you've got to be like that as a trader. You can't. I'm not saying you shouldn't celebrate your wins, but if you are too attached to the outcome of a trade, believe me, it never works out, right? You have to kind of just detach from the outcome. So hats off to them. I like the psychology, really good stuff. But let's take a look at the comments real quick. Here we go. Bad trading strategy though, isn't that one risk reward? Why risking same amount to gain some profit or same profit? Many error here, but I just unfollow before you mess with my mental state. All right, look. This whole idea that your risk-reward ratio has to be greater than 1-to-1 is utter bullshit. And I will say that, and I don't care if I get roasted in the comments, because the people roasting are not profitable traders necessarily, right? They might be somewhat profitable, but believe me, you can be profitable if you have a 1-to-1 risk-reward, right? You just need to be right more than 50% of the time. That's it. That's all it matters, right? So you can absolutely be profitable with a 1-to-1 risk reward, right? And every trading strategy is a bit different. But the people who are so obsessed with, 1-to-3, 1-to-5, 1-to-10, believe me, those people, generally speaking, don't really make that much money, right? Okay. I've seen real professional traders how they trade. I am a professional trader. I've been on trading floors. I'm telling you, on the institutional level, okay, people don't give a flying fuck about stuff like, risk reward. Oh, your risk reward isn't 1-to-3, therefore you can't make money. No, right? It's about how you manage the trade. Everything comes down to trade management. It's not about always, how... Look, I can target a 1-to-10 or 1-to-100, right, as my target. But if I close out at a 1-to-1 and still make money, right, doesn't matter. Right, I can target the most unrealistic risk reward, right? But at some point, the market's going to show me something where I'm going to be like, yeah, I probably want to get out of this trade, and I'm going to take my money or take a loss or whatever, right? Same with the stop loss. The stop loss is only there for worst case scenario. Many times when I trade, I don't even let it hit my stop loss, right? Because I can already tell, nah, this trade ain't going to work out, I'm getting out. And whether I get out at break even, get out at a small loss, get out with a little bit of a profit, doesn't really matter, right? I'm getting out because I'm managing my risk in that position. Okay, that is what is important. In fact, let me show you. I'll tell you what, I'm going to whip up my Ola Prime account. So I trade live every day, only for an hour on the live stream. With our trading coach Adelina as well on at Ola Prime TV. I'll leave a link in the description if you want to watch it. But I'm just going to show you this week's trading results, right, on that account. And anyone can see this. This was completely live, right? Okay, so if you actually look at my average risk reward of what my trade is, average win is, $431. Average loss is $323. So my risk reward is almost 1-to-1, right? Little bit better, but obviously I don't necessarily fixed target 1-to-1, right? I am getting out whenever I see fit. That is what I do with my trading, right? My best trade, basically 3,000. My worst trade, 1,500, right? And you can see my weekly trade. Like on Monday, made $1,000. Tuesday, just shy of $1,000. Wednesday, another $1,000. Thursday, $4,000. Now Thursday was the only day where I traded more than an hour. I was on for the whole show of Ola Prime TV, so therefore I was able to trade a lot more and therefore make a lot more money. But Friday, again, only an hour trading, right? Another $1,000. Total on the week, $8,295 on a 100K account. That's 8.2%, almost 8.3% in 1 week, right? And it's pretty much a 1-to-1 risk reward on average. It works out. So it's utter bollocks when people say, oh, you need to have, a 1-to-3, 1-to-5, 1-to-10. Don't listen to that crap, right? Trade management is more important. I am telling you that now. And that is what I preach on this channel when I show you the breakdowns. Look, go watch my last video, right? I show a live trade I took, and it wasn't the best trade I took on that session, but what that trade did show is, me managing my my risk, right? Managing my trade. I noticed the trade is not going to work out because the footprint was telling me it's not going to work out. It's not going to go to my TP, so I got out at like $600 something profit, and that was it. I was targeting a lot more, of course. If the market gives me more, I'm going to stay in. I'm going to, get as much as I can out of it. But if I see something is not right, because I can't control the market will do whatever the hell it wants, right? It doesn't have to go to my TP, right? If I start seeing, a bunch of sellers coming in, I'm in a buy position and the buyers are getting trapped and it's not working out, I am getting out of the market. It doesn't matter whether I'm in drawdown, whether I'm at break even, whether I'm at profit, does not matter. I am getting out of that market, and because I'm managing that position, I'm managing the risk live, second by second. That is how the pros trade. So so when people say this, bad trading strategy is 1-to-1 risk, why are you risking the same to gain same profit, such many errors here, blah 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 blah, I'm gonna unfollow you. Don't listen to these people that they know nothing about trading. I'm sorry to say that, Black, and already tell you this guy knows jack shit about trading, right? He's not a real trader. He's probably watched a few YouTube videos, he's played on a few demo accounts, he's made maybe a few dollars here and there, but for all intents and purposes, this guy doesn't know jack shit, right? And hopefully, and I'm not doing that to roast this guy, right? Because I was like him at one point as well, right? I didn't know that much, okay? I didn't understand things. I wasn't born with this knowledge, right? But you have to kind of, I like to wake people up by just being blunt with them, right? You gotta kind of be blunt. Don't sugarcoat this shit. This is the reality of it, right? You either want the reality or you want to live in a dream world where everything is, Lambos and Ferraris, and you got a 99% win rate and a freaking golden ball that will tell you everything. All you got to do is just draw a few squiggly lines. You got to map out the high and low of one candle and you'll be a billionaire. Please, come on. Let's just be real here, right? Trading isn't anything like that. You have to look at the raw data, and that is what I preach. But I'm going to cut it here. I think this video has gone on quite a bit. Didn't really roast too much, but I've got so many more of these planned. So please do stick around. Hit that like button, subscribe, turn on channel notifications if you enjoy my content. I'm going to be doing a lot more videos like this, but also watch me live at Ola Prime TV if you'd like to see me actually trade live and break down trades. That's always fun, and obviously on this channel I go over some of those live trades as well and break them down, etc., and kind of teach you how I trade essentially, so you can kind of, you know, copy what I do and learn what I do. And this isn't a secret. This is the way I trade. Is so many people, so many pros trade like that, right? This wasn't something I invented. This is just simply truly understanding market dynamics, because you have the data to understand what the hell is going on. It's a story. I always say that the market is showing you a story. You got to understand the story, and you can't understand the story if you're not looking at the damn data. You need to know who is buying, where they're buying, who's selling, when they're selling. You need to know all that information. Then you can figure out the story. Then you can understand, aha, I know what's going on, and I'm gonna guess this is probably what's gonna happen next, and boom, right? But yeah, apart from that, thank you guys for watching. I'll see you again very soon. Take care for now. Bye bye.